Hello friends, welcome to the Officers series of BFM. In Officers series, as you know, we are covering all the subjects. ABM, BFM, ABFM, BRBL, all of them, all the compulsory subjects. We are covering the numericals, objective questions, case studies. So these are very important from your exam point of view also. You know the importance of case studies in CAIIB, right? So, follow the complete video, follow all the subjects, follow all the mentors, subscribe to the channel, click on the bell icon, okay, the same channel. We will be covering today risks in banking business, second chapter in your module B. Now, in this chapter, we will be covering very important case studies, directly case studies and some objective questions. So don't miss even a single minute of the same. Okay. Let's start. First only we are dealing with the case study. So let's start. Basic CAR calculation. Okay. The case study is on basic CAR calculations. Let's assume a bank has tier 1 capital of 800 CR. Tier 1 is 800 CR. Tier 2 capital of 300 CR. Risk-weighted assets are 2000 crores in CR crores. Find the CR. So, see, this is all in crores, 800 crores, 300 crores and this 2000 crores. You have to find the CAR. Well, now what is CAR? See, there are various names to the CAR. CAR has various names. In exam, they can ask you about CAR or CRAR. Or even it can be called as Cook's ratio. Cook's, that is also same. Cook's ratio. Cook's ratio. Okay. So it is one and the same. They can ask you anything. So the basic question is you have to find out CRAR. Now firstly you need to understand what is CRAR. CRAR formula is, yeah, type in the comment section, everyone. Type in the comment section. And second point is, let me see in the comment section. Second point is this. This is very important. Tier 1 capital and tier 2 capital. The relationship, you must understand it properly. Kindly note, T2 capital can never be greater than T1. T2 capital can never be greater than T1. Okay. So let's start solving this. Let's start solving this. What is given? CRAR you have to find out. What is the formula for CRAR? CRAR formula is capital upon RWA. Okay, capital upon RWA. See this, capital upon RWA. This is the formula for CRAR. Now what is capital? There are two capitals in bank, tier 1 and tier 2. There are two capitals in the bank, tier 1 and tier 2. Okay. What is the tier 1 capital? Tier 1 is known as the free capital. What do you mean by free capital? See, suppose I'll give you a simple example. Let's say I'm having 10,000 rupees in my pocket, cash. I'm going on the road. Okay. Now imagine this 10,000 rupees get lost somewhere. Somewhere they fell down, whatever happens. The money is lost. So what will happen now if the money is lost? See, number one, very important, I'll feel very sad. Gone, 10,000 gone, very bad. One day I'll feel bad, second day I'll feel bad, third day I'll feel bad. Fourth day, what will I say? Leave it. What is gone is gone. Let's move on with the future. So, did anyone question me? Where is the 10,000 rupees? No. Why? Because it was my own money. Right? Sadness is okay, but nobody questioned me. Now look at the second part. Suppose if I take this 10,000 rupees on loan from somebody, let's say from my friend, 10,000 loan and now they are lost. So what will happen in this case? in this case, number one, I'll feel sad also. And my friend who has given me the 10,000, he'll ask me about the money. Not today, tomorrow, after 1 week, after 15 days. Definitely is going to ask me. What do you mean by this? It means there are two elements over here. One is sadness, second is giving back the money. This is tier 2 capital. Whatever you take it on loan, okay, whatever you take it on loan as a fixed repayment with a fixed repayment schedule. So that will be called as basically this tier 2 capital. So tier 2 is known as a paid capital, tier 1 is known as a free capital. Okay, it's also called as going concern, gone concern. Tier 1 is known as going concern, tier 2 is known as gone concern. Got it? So now, capital is tier 1. There was one more capital earlier that was called as tier 3 capital, but that is gone now. That is totally gone now. Okay, if you read anywhere tier 3 capital, kindly note tier 3 capital no more exists now. Okay, because latest RBI has made many changes in this. Not latest, it was 3-4 years back only. So now, let's move on. Tier 1 plus tier 2 capital. Okay, one more point. As I gave you, tier 2 capital risk, tier 2 capital can never be greater than tier 1 capital. Always remember this. T2 can never be greater than T1, number one. What about RWA? RWA means risk weighted asset. What is the risk weighted asset? Risk. Look at this. Risk weighted asset. So asset means what? What is an asset in the bank? In a bank, the asset is basically loan. Not only loan, there can be investments also. See, as a JAIIB student, you can say that asset means loans. But as a CAIIB student, you need to understand that it's not only loans, it is investments as well. Suppose if I make some investment in some bond, again some company's bond, and then that company defaults, fails. After all, that is also a loss to me. So that investment is also a type of loan only given to that company. So it is both. Okay. So basically RWA means what? Let's consider loan of some part. Okay. So this RWA will include which type of risks? Let it be loan, let it be this bonds. It will include which type of risk? It will include three types of risks: credit risk, market risk, and operations risk. Credit risk, market risk, and operations risk. So these three risks will be there. See this. This will move towards RWA. T1 plus T2 will move towards capital. Okay. So now you are having both the figures. T1 plus T2. You are having it 800 plus 300. RWA are you having it? See, totally is given. Total given 2000 crores. So just make the put the figures over here. 1100 upon 2000. So divided by, it's 0.55. Generally what do? We multiply, we put it in fraction, in percentage. So if I have to put it in percentage, I'll multiply by 100. So 55%. Okay. So CRAR is 55%. Now 55% is a huge CRAR. What does RBI say? RBI says minimum CRAR should be 9% without CCB, and with CCB it should be additional 2.5. What is CCB? We'll come to that. Okay, it's capital conservation buffer. This is an additional buffer which we have to keep. So totally it is 11.5%, but here I am getting 55%. It's huge. So it is actually bad, to be frank. It's actually bad. It means what? You are having too much of the tier 1 and tier 2 capital, or you are having too less loans. Means your bank is not working properly. It simply means that, suppose if I am having 55% CRAR, it means my risk weighted asset is very less. So if my risk weighted asset is less, what does it mean? It means I am giving lesser loans. My people are not working, sitting idle. Okay, so I have to look into that angle also. See, higher CRAR is good, but so high is very bad. From the business point of view, from the risk point of view, it's very good. Okay, so this is the answer. CRAR equals to 55%. Okay. The primary purpose of calculating the capital adequacy ratio, CRAR, is to measure bank's profitability, determine the bank's liquidity position, ensure bank has sufficient capital to absorb potential losses, assess the bank's market share. Now this is what you'll have to think. Everyone, check this. Think everyone. What should be the answer over here? CRAR is for what? For finding the profitability? Or is it because to liquidity position, bank's liquidity? Or is it to have sufficient capital to absorb the losses, potential losses, whatever might come in future, right? Or bank's market share? What do you think? What should be the answer over here? The answer is simple, right? The answer is, what is the answer? CRAR is there to absorb the losses future which might come, shocks which might come. Okay? Which of the following is considered the core and the highest quality of capital of the bank? So which is the core capital of the bank? Tier 1, Tier 3, Tier 2, Tier 1, Tier 2, Tier 3, Tier 1 or subordinate debt? Think. Answer over here, everyone. Check the answer. Which of them is highest quality capital? Highest. What do you mean by highest quality capital? Highest means just now I gave you that example. 10,000 rupees of mine are lost. Nobody can question me, although I might feel sad, but nobody can question me because that's my money. So which is the best capital? Best capital is your own money, isn't it? So Tier 1 capital, correct? Tier 1 capital is always the best capital. Got it? Clear? See this, some explanation. Tier 1 is known as going concern, that is the free capital. Tier 2 is known as gone concern, that is interest, means interest is to be paid on this. Okay? It is interest is to be paid, and T3 is not there now. Earlier it was there, but now T3 is gone. So you strictly remember T3 is not there now. Okay? Got it? So, what is the answer then? Tier 1. Okay? T1 is the best capital, highest quality capital. A loan to a government with a strong credit rating is likely to have a risk weight of. So, loan to a government, I am giving the loan to the government. Loan to the government can be given in various ways. Number one, I can purchase their bonds. That is also loan to the government only. I can purchase their bonds, or second thing, what can I do? Purchase the bonds, number one. Number two, I can give a loan to their companies. NHAI, National Highway Authority of India, CAIIB, I can give a loan to them. Okay? So, if I give a loan to any of these government companies also, which have a backing of government, 100%. Then government means which government are we talking of? We are talking of central government. We are not talking of state governments over here. State governments always have a risk, 20%. Central governments don't have a risk. Okay? So what is the answer to this? Strong credit rating is likely to have a risk weight of. So what is the risk weight over here? 0%. Okay, 0% is the risk weight. According to RBI norms, Indian scheduled commercial banks are required to maintain without CCB a minimum CRAR of 8, 9, 10.5 and 12%. Minimum CRAR without CCB. So it is 9%. Kindly note, see, CRAR is 9%. CRAR movement is like this. It is CRAR, okay, The overall structure of CRAR is like this. So here I'll first have 9%. This 9% is broken into two parts. Okay, tier 1 and tier 2. Tier 1 and tier 2. Tier 1 is having CRAR of this 7%. Tier 2 is having a CRAR of 2%. So 7 plus 2, 9, right? This tier 1 is again broken into two parts. See, this is as per RBI. Basel has a different provision. Basel says 8%, okay, but RBI says 9. So now this tier 1 can be broken into two parts. CET1 and AT1, additional tier 1. CET1 is 5.5% and AT1 is 1.5%. So now you do the total. 5.5 plus 1.5, 7. 7 plus 2, 9. 9 plus 2, 9. Okay. Now this 9% is my CRAR without CCB. So if I add CCB to this plus CCB, capital conservation buffer. What is this buffer? This buffer is given by RBI for every bank to keep. Why should every bank keep this buffer? The bank has to keep the buffer because in good times you collect for the bad times. Simple logic. In good times you collect additional 2.5% so that at the bad time you can absorb that shock. Okay, so it is 2.5%. So this is equal to 11.5. Other than this, there is one more buffer that's called a CCCB. That is not, up till now it has not been put. Counter-cyclical capital conservation buffer. That also ranges from 0 to 2.5. So 0 to, let's take maximum 2.5%. So it will be 11.5, 12 plus 2, 14. So your total CRAR will become 14%. But up till now, we have never put this triple CB. Up till now, RBI has never put triple CB. If RBI has to put triple CB, it has to give a notice of 1 year. 3 or 4 quarters. Okay. So now the answer over here is without CCB is 9%. Again, with CCB is 11.5%. With CCCB is 14%. Okay. Got it? Clear? Which of the following risks are taken into account when calculating the capital adequacy ratio? So which risks are taken into account? Think over it. Which of the following risks are taken into account while calculating capital adequacy ratio? Credit risk, market risk, ops risk. Only credit risk, only market and ops, only credit and market. Obviously. Just now we saw the numerical also, right? All the three. Credit, market, ops, all the three, correct? Clear? See this is a numerical. Let's solve this also. ABC's bank's financial position as on 31st March 2024. Capital components are given. CET1, it includes all these 3 points. Equity capital, reserves and surplus. Okay. Plus it includes 2 more which are not given over here. That is net profit and revaluation reserves. It's not mentioned. It might be mentioned somewhere. See, this is mentioned over here. This is a trap for you. Typical case study. This is a trap for you. I'll show you. So that is 10,000 crore. Additional tier 1 capital, PNCPs are 2,000 crores. Subordinate debt is 14,000 crores. This is shown as a part of T2 and revaluation reserves are 1,000 crores. Now, this I told you it's a trap. Why? Because this is never a part of T2. This is always a part of tier 1. And that also CET1. CET1, this is a part of CET1. CET1 has 4 components. Equity capital, reserves and surplus, net profit and revaluation reserves, RR, this one. They are taken at 45%, means 55% discount. So we take this at 45%. So you have to calculate the CRAR now. That's why I said it's a trap for you. This is a, in exam also, if they give you kindly note, it's a trap. Okay. So look at this. Let's solve this. How to solve it? See, I told you it's a trap over here. So this 1000 I have brought it over here in the numerator, right? So now let's solve it. Tier 1 is what? What is my tier 1? See, formula remains the same. You have to find out the CRAR. Capital upon RWA. Capital you know everything. Tier 1 capital you know. Tier 2 capital you know. Okay, go on adding them. Tier 1 is what? Tier 1 is 10,000, right? Plus 2,000. So 10 plus 2, 12. Plus this revaluation reserve. Now this revaluation reserve, what did I say? We have to take it at 45%. So 45% of 1000. So it is 450. So this revaluation reserve will become 450 CR. This 450 CR will become the part of tier 1. So what will I do? I'll add all these now. So 10,000 plus 2,000 plus 450. So it becomes 12,450 CR. This is my tier 1 capital. Okay. Now what is my tier 2 capital? Tier 2 capital is only one, subordinate debt. Nothing else is given. So take it 100%. Only contingencies and general provisions are taken at 1.25% of RWA. Only that. Remaining everything is this 14,000, means 100%. So take it 14,000, 100%. Always note T2 should never be greater than T1. So here T2 is what? 14,000. What is T1? 12,450. So what will I take? I will not take T2 as 14,000. I will take T2 as maximum this much only. So I'll be taking 12,450 two times. T1 plus T2. This T2 also will become 12,450, not 14,000. Kindly note this point. So the figure is 24,900. Okay. This much is my total capital. Yeah. This much is my total capital. So now what? Once you know the capital, calculate the capital. Yeah, capital is only asked because RWA is not given. No? So only capital is asked. So that is the answer. This is the capital, 24,900. See, always remember it's a trap. This revaluation reserve is always a trap. Plus there is one more trap, provisions for contingencies over here. The figure is given, it is always to be taken as 1.25% of the RWA. Okay. So, done? Clear everyone? So now, before going, everyone kindly note, the new batches of Adda 24/7 have just started. Okay, join them ASAP. Don't miss them. How will you join them? For joining, you have to download Adda 24/7 app. This app you can download it from both Google also, iPhone also. Okay, download it right now. By downloading, just by downloading, you get 1% extra discount. Just by downloading. Okay? And then go to Adda 24/7, click on JAIIB and CAIIB. Click on CAIIB 26. You see. If you click on CAIIB 26, you will see all the Mahapacks, all the batches. See the new batch which is starting, okay, for English, it is just started, elevation batch, okay, this pro, okay, this new batch. So, this new batch is starting from 23rd Jan 2026. New batch is starting, huh? Don't miss this batch. In this batch, we will be covering the numericals, objective questions, case studies. You will have live videos, recorded videos, everything. E-books will be there, mock tests will be there. And discounts are huge, 82% discount. The best, you have some time, so you have a lot of time up till now. So what I would suggest is you either purchase CAIIB Increment Mahapack. This is one of the best Mahapacks. Why? Because here you are having triple validity. See, both of them are there. Here you get physical books also. Here you don't get physical books. So purchase this CAIIB Increment Mahapack, triple validity. You buy for 5 months, you get it for 15 months. You get it, buy for 9 months, you get it for 27 months. Here you get 15 plus batches per subject. Plus, you get physical question bank, physical formula bank, physical study planner, physical delivered at your home, books, all the subjects you get it. Plus, already I told you 15 plus batches per subject. So, it's a huge triple validity. Discount, see the discount. Click on buy now. Put the code Y432. See this. Y432. Okay, click on apply. Look at this. 82% discount plus 1% extra, 83 by downloading the app. So net you are getting huge discount, triple validity, 15 plus batches, ebooks, mock test, live books. It's a win-win. Join ASAP. Okay.